right. Hey, welcome back to Wall Street Silver. I have today our guests, Kevin Wadsworth and Patrick Karim. These are from North Star Bad Charts. Thanks for joining me, guys.
Hi, Jim.
Hey, Jim. Good to see you.
So today our goal is to talk about the big picture. You know, Kevin and Patrick, they're expert charting analysts, technical analysis. And I asked them to join us today to talk about the big picture silver chart. What's actionable right now? What can our audience really take away from what's happening in the silver markets? And to share with us some of the stocks that they think are actionable right now. Which ones are showing the best technical trends? I'm new to all this. I'm a very much at an amateur level. If I can draw some simple lines, but Kevin and Patrick are sort of well known on Twitter for taking this to a whole different level. So Patrick, Kevin, tell us what you got.
All right. We've had a lot of requests for to cover AbraSilver, I think previously known as AbraPlata, ABRA on the TSX Venture. Also GSVR, Guanajuato Silver Company. I think previously you guys known this as Vangold. And even now a new upcomer is Sterling Metals, SAG, also on the TSX Venture. And there's a lot of charts that have been exploded, consolidating, and we're looking at charts where right now, after or during this consolidation, have shown strength versus their peers, and that are holding out the best, creating good, high reward, low risk opportunities. So here I have my default setup, my monthly chart, always to reduce noise with 1 year and 3-year moving average. I have my volume profiling right here on the right. And I have here my distance from the 12-month moving average. This is what I call my fear of missing out type of indicator. So we've seen that previously. How come that black line? We've seen previously that AbraSilver was able to explode away from its 12-month moving average. And probably here, that's when everybody says, oh, it's going to the moon. But after that, when you get too stretched, then the moving average has to catch up. So either you consolidate sideways or the price action goes down, but you need to let that moving average catch up. But as long as you're above an inclining 1-year moving average and you're staying above, even that 3-year moving average is starting to turn up. So you're creating important long-term uptrend. And that's what you want to be, this type of trends that you could ride for a long time. Look at that. We're so close to that 1-year moving average. And here, nobody's talking about buying silver stocks. So as the price action starts consolidating and that 1-year moving average catches up, this is where nobody talks about silver or silver stocks. It's the end of the bull era. Look, either it's the end of the bull era, or this is probably one of these rare opportunities to buy close to a still inclining 1-year moving average. And right here, I have the stock. And like Kevin would probably tell you, on the monthly chart, people, it has to go back down on it's overbought. It could stay a long time. As long as it fluctuates close to that upper boundary, that's what I call the bull power zone. And as soon as you think it's going to go out, if it turns back up and the price action starts distancing it away from that 1-year moving average, then you know that you're still in the bull power zone. I'll even zoom in on the weekly. So this is another setup I have, more like a Stan Weinstein's type of setup, 10-week moving average, 30-week moving average. I have my Ichimoku cloud defined support uptrend. And this is what's important. You have to see how the price action previously reacted to the trend, the moving averages. And right now, it's always, when it was really exploding, always staying above the 10-week. And when it's consolidating, it violated the 10-week, but it always never closed below the 30-week. So this giving you clues that the 30-week moving average is really being responsive right now for AbraSilver. Right
so here. I can see that you're looking at the monthly chart and the weekly. Do you ever drill down a little bit more to the daily chart, or is that just too much noise for what you're looking at, Patrick?
Yeah, I try not to go down the daily. I've realized that daily 8-hour, 4-hour charts, you start to get in noisy type of territories, a lot of false breakouts, false breakdowns. So always try to zoom out and get as many candles as you can. So you could go on the daily, but you really have to zoom out and have a lot of candles to try to equate what a monthly candle encompasses, like 20, 30 daily 20 candles in there, right? The daily candles. So it reduces a lot of the noise. And right here, it's getting close. This is what Kevin there would call it's almost a descending, Kevin, a bullish descending broadening wedge, right?
Yeah, you got an expanding wedge there, which is a bullish chart pattern, and you've got a sort of a flagpole leading up to that, so you can start to estimate some of the targets from that. And I mean, long term, this is a great chart. You know, you've formed a base. Price has bounced off that base. It's gone up through the important moving average. It's gone through the long-term downtrend line. And as long as you stay above, essentially, you know, really, as long as you stay above the supporting moving averages there that Patrick's been talking about, then it's just a case of buying, holding, and adding on weakness. So if you're in this for a period of months or even years, it's a case of watching these bigger chart patterns build out and watching these support levels and just using them to your advantage. What we're doing as technical analysts here is stacking the odds in our favor, and we're finding really ideal opportunities to enter the trade. If you missed it the first time round, you can see what Patrick's drawing on there. You've had actually 3 attempts to get back in on this after the breakout. It's come back and tested those moving averages. This is the 3rd time now, so the third bite of the cherry, really.
As long as we stay above that cloud, the green. I mean, what did you call that cloud there, Patrick?
Ichimoku cloud. It's Japanese techniques. They're like, the Japanese are so good in trading for their rice trading back in the 1700s or when they did that. And it projects. So the price action that happens here, it projects it in the future. I think right here are the settings. There are 26 periods in the future. It projects eventual support. So it knows that if you had a lot of people buying at a certain region, eventually when you go in the future, that's a support. And it's the inverse when you're below a cloud, a few peers below. So it kind of calculates where you could expect. So somebody who's not used to chart trading, who is not a classical chart trader, that gives a great visual representation of where you are. So if you're above an inclining green cloud uptrend, below, you're in the downtrend.
So this combination of being above the 30-week moving average and above the cloud, but getting close to it, that's telling you it's pulled back. And now's a good entry point for the next leg higher. Is that what this is sort of indicating to you in layman's terms?
Precisely. So this is like a fear entry. So right now, you're not sure anymore. Is it the end of the bull market? Well, you have to give the benefit of the doubt that this is actually going to be a bounce area. So as soon as we close above this, the upper line of that broadening, bullish, descending, broadening wedge, as soon as you close a weekly close above that, then this target is enacted. So for Abra, once we close above this line, the target would be around 86 cents, and it would be the same angle of ascent. So maybe in later this year, so in Q4, or maybe even Q4, Q3, you could expect to be at this region as soon as this breaks out. If it takes a bit more time to break out, then it just scales sideways, right? So that pattern could stretch out to the left, and then you could have your target a little later during the year.
All right. Well, let's move on to the next one. That's a good chart there. What do we have here? This was your second most requested chart?
Yeah, it was on the NorthStarBatCharts.com just yesterday. I mean, Kevin, we had so many requests, and we were handling them like as best as we could. So we decided to really put in a feature to officialize, like, okay, let's see what people really want to hear, and they'd love to see charting. And Abra was number 1. And this one was number 2, like just naturally all our members, that's the one that they wanted to see.
So Guanajuato, which used to be Vangold.
And this is a classic downtrend. You see below the 1-year moving average, always respecting it. 3-year, never violated. So as soon as it had a close above that 1-year and 3-year, you knew something was up. But it's rarely just the first time that it breaks above that. Sometimes it might need if it's before the bull market in precious metals, it might need a little bit more time. But it was showing great good wake up call right about here. Tested a second time, bounce off the 3-year moving average site, and then after that, this is the final dip. Everybody gives up, and then this is the rally that brought it all the way above this critical breakout line, monthly defined breakout line around 43 cents, and now, within 1 to 3 months, usually you get a test of those breakout lines. So all these people buying on breakouts, usually they're over leveraged, and then when the price, they don't understand that it doesn't go in a straight line, and as soon as it comes and retests that breakout line, they sell. Oh man, but this is actually, in a bull market, this is actually the second best opportunity to buy. So on the breakout, you keep some bullets, and then you buy on the correction towards that breakout line, the 1 year moving average catched up. Remember, guys, I did this exercise for Abra. So here I have the important places where it refused to get the distance from the 1 year moving average, and now it fully reset. Again, the weight of evidence, unless the bull market's over, this is probably the rarest opportunity you're going to get to re-enter. On the smart time frames, it could actually go lower. We could have a wick below the 1 year moving average. It could go down to 30 cents, whatever. But as long as we get a monthly close above the 1 year moving average and above that horizontal breakout line, this is the very bullish configuration for Guanajuato Silver Company.
Yeah, and it's the start of the early signs of a developing uptrend. You can see that the distance from moving average is below the zero line on the left-hand side of this chart, and that's because we've been in a bear market. We've had a long sort of basing period now, and you get those same three things that happen every time. You get the bounce out of the basing period, you get the move through the long-term downtrending resistance line, and the move up through the important moving averages. Those three things, when you look back with hindsight and you're looking back at charts, that have moved really well over the last year or 2 or 3 years or more. This is always how the move starts. Right at the beginning, you get this basing formation, the move above the moving average, declining trend line. So as Patrick says, unless we're in the bear market still, then this is the beginning stages of the next cyclical uptrend, and all of the technical indicators at the moment are suggestive of that. So you respect that, you monitor the movement of the stock in relation to those moving averages and the arc that Patrick has just drawn, and it gives you a reference point. As technical traders, it gives you a reference point, and you're able to start calculating, as Patrick's doing on the chart now, the price movement moving forwards. Very often the angle of descent into a base like this is very equivalent to the angle of exit when you come out of the other side. Energy in equals energy out, if you're thinking sort of in a scientific terms, as I tend to as a with my background in science. So it's a sort of process of energy conservation. So you can work out your measured moves and set some targets, and it also helps, of course, if things begin to go off plan. It gives you an early heads up that something isn't quite right and things aren't going to plan. So you need to map these things out so that you have your future forecast in your mind, and you're able to keep a constant track of that forecast and know if it's on track.
So what would you call a late 2021 target for this one, Patrick?
So right now, if this is a confirmed reverse symmetry move, so since it broke out above, so whatever happened in the base happened in the base. As soon as you go out, for me, the reverse symmetry move could be as fast as later this year, around $1.80, $1.75. So I expect if we survive this resistance test, the support test, it should really rocket upwards. I could cheat a little bit, maybe a little slider.
Whilst Patrick's doing that, and one thing I'll just also explain is that sometimes you get support lines meeting, and in this case, you can see, looking ahead a little bit into the future, that the rising moving averages are going to cross through the edge of that arc, and just where Patrick's drawn that pullback, that possible pullback, you can imagine that the moving average would be crossing through the arc at that point. And when you get more than one technical indicator crossing, it can be support lines, horizontal support lines, moving averages, or the edge of an arc like this. It's a sort of a focal point. All the energy is drawn towards that point, and it acts like a magnet, and it can very often pull the price down towards that sort of magnetic point, and then price tests that and then accelerates away to the upside. There are no guarantees in this, of course. We're forecasting the future, but it's something that we see over and over and over again. So just identifying these points helps put us one step ahead of the price action.
So step one, resolve, hit that target here, wait to see what happens there. Does it rocket upwards, or it's going to, like Kevin says, get a retest? And it always, the market's always there to take the money from the folks who bought over leverage on the stretched away. Because when the price is going to be here, you're going to have another warning sign. You're going to be super stretched away from that 1 year moving average, probably, if it gets there that fast, and it's going to need time to reset. And that's when people, they usually lose patience or they give up. And as Kevin says, as soon as the confluence of support is touched on the right hemisphere, and that will confirm the geometry of the arc. When you have a second touch on the right hemisphere, it's a higher low, and then it really confirms that angle of ascent. Then we get these higher up targets for 2024, probably at the top of the arc at $17.
Wow, that would be a huge move for the. I mean, so let's move on to sterling metals, our third one. And I'd like to just also point out all three of these are stocks that I believe Eric Sprott has also invested in. So he sees something in each of these companies long term. But go ahead with sterling.
Look, we kind of saw this in the GSVR. So sterling metals is like kind of catching up. So all the negative downtrend below 3 year moving average, never being able to get above. Look at that. These are bullish clues. It's managing to be above an inclining 1 year moving average, managing to be above a 3 year moving average. And the longer it stays above that 3 year moving average, see, it's not declining anymore. It's flat and it's even ticking up. So that's important 3 year momentum trend. That's really something like the markets, the flows of capital are deciding that there's something supporting it. And for the past 1, 2, 3 months, and currently fourth month, it's still staying above the 1 year moving average. So that's a very good sign that it's able to maintain that type of resilience. So for sterling, let me zoom out.
So what Patrick's drawing there is those same three things that I've been talking about. The price has hit a bottom, it's based, it's bounced, it's forming a bull flag, it's gone up through the important moving average, it's testing and passing through the long-term downtrending resistance lines. So it's those three things again that we look for at the start of a long, new, sustained bullish move. The distance from moving average has been reset. The stochastic indicator and other indicators are in the higher zones. Patrick's just marked with the yellow shading there, and that's where we need it to be. When people talk about it being overbought, it's not so much overbought. It's just that the indicators are in the higher zones, which is where you want it to be, because it helps to power the move. It's indicating that the trend and momentum is strongly pushing that stock to the upside. So the longer it stays in that upper zone, the better. It doesn't mean that it's just going to come plummeting back down anytime soon. So yeah, this one's looking really, really optimistic, really good, and early stages of a new uptrend.
Here's the volume profiling. So some visual guys might have seen this. I didn't talk about it for the first two stocks, but they're the same type of setup. Because me and Kevin were so used to seeing these bullish clues that our brain kind of we don't realize. We're like, without realizing it, we know these are bullish. This is a lot of volume for that price range. So all this, I call that a volume defined base. So all the price action, all the hands that traded, the weak hands selling because they gave up, tax selling season, new people. So as soon as you're above this type of volume of people changing hands, that becomes important support. So as soon as sterling metals is able to get back up to slide above that monthly defined close right here, so around 70 cents, or right here, yeah, about around that 70 cents level. Am I saying that right? Yeah, about 70 cents level, close above that. It's going to start sliding through the thin zone. There's nothing there. There's no more buyers. There's no more people that bought here that haven't sold during this base. And as these price drops, they drop fast. There's not many people that are able to buy as the price action plummets. So that's why there's not a lot of people bag holding at those price levels. And that's why these reverse symmetry moves, so whatever base we have that could play out, that's why these reverse symmetry moves have, you see them over and over and over trying to, being able to play out. I think I'm going to zoom in on the weekly, Kevin, for this one to get more details. Because
yeah, and it helps with these arc basing formations that we've identified. It helps to give you a much longer term target, not just in terms of the price, but in terms of the time as well. So the sort of time period that we may expect these longer range targets to be achieved.
Yeah.
You always have to keep checking the edge of that arc though, and reminding yourself that at any time the price action can come back down and test that arc. And you can see Patrick just moving the arc from left to right there. And until you start getting some confirmation points on the right hand side of the arc, it's a little bit of guesswork as to just how far you need to extend that arc to the right in terms of time, because it's only those touch points on the right hand side of the arc that finally fix it in place. So we're pretty confident that there's an arc forming and this basing pattern is building, but until you get some more confirmation, it's just a little bit of trial and error as to where the edge of that arc should sit. So we adjust it as we go forwards in time, and it's constantly giving us more information and more information as the bull market continues.
Because there's no that arc, there's that 3-year moving average. So it's always the weight of evidence. That 3-year moving average, usually at that important turning point on the arc when everybody gives up, they're touching. So that 3-year moving average, the width of the arc. So there's not always an arc. So depending on the price action, the weight went down. Where is it in the bull market? At least I'm trying to fit one, but it doesn't always fit, Sometimes you'll see it, it'll morph into existence. But okay, let's go on. I'll do the cloud for this one just to get some. And
this is where we use different technical analysis techniques, because you're scrolling through a whole toolkit of different ways of technically analyzing these charts and finding evidence, pieces of the jigsaw puzzle, because that's what we're doing, is just solving a big puzzle here that helps us to work out the odds of price going up versus price going down. And there are times when it's very evenly balanced and it's 50-50, and then something happens and technical breakouts happen, something like that, and the odds suddenly start shifting. And it just gives you a very early kind of heads up, very early indication that the odds have changed and that you move from 50-50 to 80-20, favoring a move to the upside, that kind of thing. So it's not that we can say with 100% certainty whether the price is going up or down. I don't think anybody would claim that. If they did, they'd be probably misleading you. But we're able to analyze the odds, a bit like weather forecasting. We can look at the odds and tell you what the probabilities are of getting rain today. Well, we can tell you sort of what the probabilities are of price moving up, down, or sideways by using these techniques.
What's a late this year or 2022, 2023 type of target you're looking at here?
Well, this is the 10-week, 30-week moving average on the weekly chart above an inclining Ichimoku cloud. So remember, look how violent the red one is. You're in a downtrend. You don't buy when this is happening. But right now you're above an inclining cloud. So this is just the beginning of the bull market for SAG. And here I'm trying to see if I have a type of pennant or bull flag. So if this resolves, and right now it's at a confluence of the 10-week and 30-week and price action all squeezed together. So either this fails and goes through the cloud, but the odds are, since you're above the cloud, this will be a springboard. So once you get a close above, let me zoom in. The angled trend lines, they don't. So let's say I zoom in to get a little bit more precision. And it's really getting clear. Look, we're on the third touch right now of that breakout line.
And very often when you replicate these moves, you sort of scroll across to the left-hand side and you find that it coincides with an area of horizontal resistance as well. So you're calculating your target using one method, and then it's confirmed by using another method. So you end up with a little range of targets around, it's around about 90 cents, is it there, Patrick? Something like that we're looking at. So there'll be other methods that give slightly different targets, whether it's 85 cents, 95 cents, 92 cents. They all cluster around that sort of area there, and that's your next sort of defined target. And it, as I say, very often ties in with horizontal support and resistance levels as well. So
yeah, it's just a question of time, observing, using different lens, different angles. And that's why, like with Kevin, he looks at a chart different ways. He says, "Oh, Patrick, did you notice there was that pattern there?" Then I look with Fibonacci retracement or something, and there's a confluence. So when we start seeing a confluence of targets in the same region, then it increases the odds. So this for SAG, as soon as you have a weekly close above this descending trend line, it enacts its target. So let's say that 90 cents for Q3 or Q4 of this year. Yeah, so it could slide sideways a few weeks or two, but that's the linear, non-greedy measured moves for these miners, and they have a tendency to move logarithmically. But if you want to be conservative, that's how you should measure those measured moves.
Well, let's take a look at the big picture silver chart now and wrap this up as to what's the underlying commodity look like for these three silver companies.
Well, so if you look at silver, if we apply whatever we covered today in the podcast, what's good for the stocks is good for any instrument. So your readers right now, I put back my monthly chart on the 1 year and 3 year. So all of our viewers now, hey Patrick, that's a bull power zone. I love it for the stock. Hey Patrick, look, I'm the moving average. It's reset above the 1 year moving average. So it never closed below the 1 year moving average. This is actually probably a great fear entry for silver. Nobody wants silver right now. It's not Googling trending anytime now. And we know that it's able to go parabolic and get really stretched. So until silver is stretched 50% above its 1 year moving average, you don't even look at selling or taking profits until at least that happens. Yeah.
I was going to say, and this is where, very often we get asked, yeah, but what about fundamentals? Fundamentals are good or fundamentals are bad. And I think we probably all know that fundamentals for silver are very, very good indeed when you try and actually start thinking about it in any kind of fundamental way. And, the answer to that is that the chart takes all of that into account. The fundamentals for silver since the 1970s and further back, it's all built into the price history of the silver chart. So the fundamentals are all there on this chart that we're looking at now. So all of these support and resistance levels, Ichimoku clouds, distance from moving average, there's nothing new that's going on here that wasn't going on 10 years ago or 20 years ago or 30 years ago. It's all the same techniques. Nothing is changing. As an analyst, you look at these support and resistance levels and they behave in the same way time after time after time again, and they give the same signals: buy signals, sell signals, signals that it's time to be cautious, and signals that it's time to forget about the fear, forget about the fact that everybody's panicking, and back up the truck, as they say. So this kind of technical analysis, it goes hand in hand with the fundamental story for silver, which is, of course, really, really bullish. And we all know that at some point over the coming years, silver is going to make some really, really huge, impressive moves. Some of the charts that we've looked at, give targets that, I suppose a lot of people today would think are a bit ridiculous, but, the technical targets are what they are. And, as they play out, we track the charts, we follow the charts, and monitor each pattern as it builds out. Patrick's looking at the latest one here, which is a fairly typical consolidation pattern, a flag type pattern, a pennant. And with a measured move, and of course that becomes enacted as soon as we get the breakout. As a technical analyst, we're aware that if the price breaks down for whatever reason and crosses through the support line, then that's a different scenario. But this is a typically bullish pattern, which will be confirmed on the breakout, and that gives you the next target up. And the targets are somewhere, generally speaking, above $40 and perhaps as high as $50, depending on which techniques we're using. So later this year, sometime in the next sort of 6 months or so, with most, a lot of the analysis that we've been doing gives a high likelihood of targets somewhere in the mid 40s, 44, 45, anything like that, with a possible retest of the all-time high.
Just to add also, there's a lot of analogs like with gold. So gold, when it was at this pattern below its neckline from that huge pattern it did in 2010 to 2012 to 13, gold went above its all-time highs all the way to like 2000 and above, what it did last year, in less than 6 months. So silver, as soon as it closes 28 or 30 on a weekly basis, that's why I expect, and it's probably going to match up with these angle of ascents within 6 months, maybe faster, because silver has a tendency to be a little bit more maniac. It should reach those all-time high very, very fast once it closes above. But look, if we have another event like March Madness, where look, you had a nice pull flag which failed, and then it went down, then that's another story. But as soon as you go back above, then you create another pattern. So the charts always morph, guys. But as long as we don't close below the 1 year moving average, and we're coiling towards that breakout line, it's bullish, bullish, bullish.
And again, the technical analysis back in March was superb, because it gave us that warning that the potentially bullish flag pattern had broken down, and it plummeted all that way down there to a level that was unsustainable, really, just like the price of oil being negative. It was just completely unsustainable in a world that needs silver. So there was only one way that was going to go, and that was to catapult to the upside. So if we do get a breakdown of this pattern, and we see a test perhaps all the way down to that, is it the 3-year moving average you got there on there, Pat?
Yeah.
The lower moving average line, then that would be stretching way below sort of levels that it ought to be at, in inverted commas, and you'd expect a very violent and big upside reaction, just as we had last time. So that would be a back up the truck event if it were to happen. So knowing where the lines in the sand are and the support and resistance lines are, it kind of gives you that sort of trigger level. Either great, we've got a brilliant buying opportunity coming up, just wait until price gets to some ridiculous level where it shouldn't be, or price is breaking out and it's going to catapult to the upside and get up to that $45-50 level again. So it just gives you that sort of point in time where you can become confident about which way it's going.
Well, thank you very much. This has been very interesting to get updates on these charts and the big picture for silver. I want to thank Kevin and Patrick for sharing their information. I know you guys are some of the best on Twitter doing this right now. And we would just like to really appreciate you guys doing this for us.
Thanks, Jim. It's been great. And we hope we can help some more in the future. It's always good looking at this sort of stuff. Me and Patrick, we're pretty passionate about it.
Yeah, definitely. And I will include a link to your website in the description, and to your Twitter handles if anyone wants to follow you guys going forward on Twitter.
Cool. It was an honor, Jim.